Hello everyone. In this class, I am going to teach you how to pass the journal entries based on traditional approach. It is also called as golden rules of accounting. Fine. See, I have already explained the traditional or golden rules of accounting in the previous class. So I will provide the link in the description box. Please watch that class first to better understand this example. Fine. See, now we will solve the problem based on golden rules of accounting. See, Mr. Suresh furnishes the following information. The transactions during the month of April 2024 are as under. These all are the transaction. Here we need to journalize the transactions based on golden rules of accounting. See, these are the golden rules of accounting, that is real personal account, real account and nominal account. The rule of personal account is debit the receiver and credit the giver. And what about real account? Debit what comes in and credit what goes out. And nominal account, the rule is debit all expenses and losses, credit all incomes and gains. Before solving the problem, we have to write down the format of journal. See, first we need to write books of Mr. Suresh, and here we need to write journal, and here date, particulars, LF. LF means what? That is the ledger folio. It means what? It is a reference column in the journal books that indicates the page number of the ledger where the corresponding entry has been posted. This is the debit amount and this is the credit amount. Now we will solve the problem. See here. First one, that is on 1/4/2024, business started with cash rupees 1,50,000. It means what? Mr. Suresh, he has invested the cash in the business for rupees 1,50,000. First, what is the step? First step is, first we need to identify the types of accounts to be involved in this transaction. See here. Here the two types of accounts involved are cash account and capital account. Cash account and capital account. In this cash account, it falls under the real account category, because real account, that is related to all assets including tangible and intangible assets. Cash, it is an asset, so it falls under the real account category. Fine. And second account is capital account. See here, capital account, it is classified as personal, real or nominal account. See, capital account, it is classified as a personal account. Why? Because it represents the owner's financial stake in the business. According to the golden rules of accounting, personal account relate to whom? Individuals, means they are the natural persons or firms or organization, and the capital account, it is essentially reflects the owner's position in the business. So here we should not write Mr. Suresh account. We have to write capital account. So the entry is, here we need to write down the date, and in the particulars column we have to write cash account debit. Why? Cash account, it falls under the real account category. What is the rule of real account? See, the rule of real account is debit what comes in. Debit what comes in? Cash is coming into the business. So we need to debit the cash account. So cash account debit to capital account. Here the owner contributes the capital. Suresh, he contributes the capital. So the capital account is credited. Amount is debit amount 1,50,000 and credit amount 1,50,000. After that what we have to do? Afterwards we have to write the narration. It means being business started with cash. Fine. And after that now we need to underline only the particulars column. Fine. We need to underline only the particulars column. Now we will go to the second transaction. That is, see here, second transaction, it is on the same date, goods purchased from Manisha, that is rupees 36,000. Goods purchased from Manisha 36,000. What are two types of accounts involved here? First one, purchase account. We should not write goods account. We have to write here purchase account. See, purchase account, and from whom we have purchased the goods? From Manisha. From Manisha we have purchased the goods. See, purchase account, it falls under nominal account. Why? Because purchase, it is an expense. Fine. Now we have to see the rules of nominal account. Nominal account, debit all expenses and losses. See, purchase, it is an expense. So purchase account is debited. And what about Manisha? Here Manisha account is credited. Because why? Manisha, it falls under the personal account category. Credit the giver. So Manisha's account is credited because she is the giver of goods. She is the supplier of goods. Okay, means we have purchased the goods from Manisha. Credit the giver. Who is the giver? Here Manisha is the giver. Okay, so second entry. On the same date, just we will write here April 1st. Okay, again we need not to write the year. Goods purchased from Manisha. Which account we need to debit? So purchase account. Purchase account debtor to from whom we have purchased the goods? From Manisha. Manisha is a personal account. The rule is credit the giver to Manisha's account. Purchase account debtor, the amount is rupees 36,000. Credit amount 36,000. Now we have to write the narration. Being goods purchased from Manisha. See, in this transaction, goods purchased from Manisha rupees 36,000. Here they have not mentioned whether they have purchased the goods for cash or on credit. Here in this transaction we will assume goods purchased from Manisha on credit. Okay, goods. So being goods purchased from Manisha on credit. Okay, next step is we need to underline only the particulars column. Next one, third entry. Third entry is on the same date, that is stationery purchased for cash rupees 2,200. Okay, so stationery purchased for cash rupees 2,200. What are the two types of accounts involved here? First one is stationery account and second one is cash account. Okay, stationery account. So here stationery account, it falls under which account? It falls under the nominal account. Stationery, it falls under nominal account. And why it falls under nominal account? Because it is an expense. Stationery, it is an expense for the business. And what about cash? Cash, it is an asset. It falls under the real account category. Now we have to check the rules. Nominal account, debit all expenses and losses. Stationery, it is an expense, so we need to debit the stationery account. And what about cash? It is a real account. Now the rule of real account is credit what goes out. We are stationery purchased for cash. We are purchasing the stationery by paying cash. So real account rule is credit what goes out. Cash is going out. So cash account is credited. So now we will write the journal entry. That is also on the same date, April 1st. Stationery account, debit to, we are paying the cash for purchasing the stationery. What is the amount? That is 2200. Being purchase of stationery for, see, in this transaction they have mentioned they have purchased the stationery for cash. For cash, being purchase of stationery for cash. Now we need to underline only the particular column. Fine. Now next transaction. On 2nd April, open a bank account with SBI for rupees 35,000. Sorry, fourth transaction, that is open a bank account with SBI for rupees 35,000. See, now what is the first step? We have to identify the two types of accounts to be involved. They are open a bank account with SBI. First one with SBI means open a bank account. First account, that is bank account. Bank account, it falls under which category? It falls under personal account category. The rule of personal account, it is debit the receiver. Open a bank account. Bank receives the cash. That is rupees 35,000. Bank account. Debtor to which account we need to credit now? First one is bank account and second one is cash. Cash account. Cash account is an asset. So it falls under real account category. What is the rule of real account? See, credit what goes out? Cash goes out. Okay, open a bank account with SBI for rupees 35,000. Means we are depositing the cash. So means cash goes out. The rule of real account, it is credit what goes out. So the next journal entry is on April 2nd. Bank account debtor to cash account, that is rupees 35,000. Being open a bank account with SBI. Okay. Afterwards, next transaction is on the same date, that is 2nd April, goods sold to Priya for rupees 16,000. Goods sold to Priya for rupees 16,000. See, now identify the two types of accounts. So accounts involved are goods sold to Priya. First one sales account and second one is Priya's account. So Priya's account, it is a personal account. The rule of personal account, it is debit the receiver. Who is the receiver here? Priya, she is the receiver of goods. So Priya's account we need to debit. Priya's account, it is a personal account. So debit the receiver. Fine. That is Priya's account debtor to sales account. Sales account. That is, it falls under nominal account category. See here. Credit all incomes and gains. The rule of nominal account, credit all incomes and gains. So sales account we need to credit because we are earning the income. We are earning income by selling goods to Priya. So the rule of nominal account is credit all incomes and gains. Here we are earning the income by selling goods to Priya. Goods sold to Priya for rupees 16,000. So here we need to debit the Priya's account. Priya account, it is a personal account. So rule of personal account is debit the receiver. So April 2nd, Priya's account debtor to sales account. Amount 16,000. Now we have to write the narration. Being goods sold to Priya. Next transaction. Next transaction, that is on 3rd. Now April 3rd, what happened? They received a check of rupees 16,000 from Priya. Received a check of rupees 16,000 from Priya. Here the two types of accounts involved are check means bank account. From whom? From Priya. So bank account and Priya's account. Bank account, it is a personal account. Bank account is a personal account. The rule of personal account is debit the receiver. Debit the receiver. Bank account, so we need to debit the bank account and we need to credit the Priya's account. Priya's account, it falls under personal account. Credit the giver. Who has given the check here? Received a check of rupees 16,000 from Priya. Priya, she has given the check to Mr. Suresh. So credit the giver. So we need to credit the Priya's account. That is on 3rd. April 3rd, bank account debtor to Priya's account. Amount 16,000. Being check received from Priya. Underline only particulars column. Next transaction is sold goods to Nidhi, that is rupees 14,000 on 5th April. Sold goods to Nidhi, it is same as the transaction that is related to April 2nd, goods sold to Priya. See here, two accounts involved, that are sales account and Nidhi's account. Sold goods to Nidhi. Nidhi account is debited because Nidhi, it falls under personal account category. The rule is debit the receiver. Nidhi, she is the receiver of the goods. And sales account, that is a nominal account. The rule of nominal account is credit all incomes and gains. So, what is the journal entry on April 4th? Goods sold to Nidhi. Nidhi account debtor to sales account, that is rupees 14,000, being sale of goods to Nidhi. Now we will move to the next transaction, that is on 10th April. 10th April what happened? The purchased goods for rupees 20,000 on credit. Here they have mentioned on credit from Ritu. Purchased goods for rupees 20,000 on credit from Ritu. Here two types of accounts involved are, first one purchase account and second one from Ritu, Ritu's account. Purchase account, it falls under the category of nominal account because purchase, it is an expense. Here we need to debit the purchase account, debit all expenses and losses because purchase, it is an expense. And second one, it is second account, that is Ritu. Ritu, it is a personal account. The rule of personal account is credit the giver. From whom we have purchased the goods? From Ritu, means Ritu, she has given the goods to Mr. Ramesh. Credit the giver. Ritu, she is the giver of goods. So, the journal entry is, that is on 10th April. April 10th, purchase account, debtor to Ritu's account, amount 20,000 rupees, 20,000, being goods purchased from Ritu on cash or credit? On credit. Credit. next transaction, that is on 14th April, that is paid rent rupees 2000. Paid rent rupees 2000. Here two types of accounts involved are, first one rent account. Rent account, it is an expense, so it is related to nominal account. The rule of nominal account is debit all expenses and losses. Paid rent account, and second account, that is cash account. So cash account, it is an asset, so it falls under real account category. And what is the rule of real account? Credit what goes out. Credit what goes out. What goes out? We are paying the cash for the payment of rent. So here we need to debit the rent account on 14th April. Because rent, it is an expense, so it falls under category of nominal account. Debit all expenses and losses. Rent account debtor to cash account, means cash is going out of the business. For what? For payment of rent, that is rupees 2000. Being rent pay. Being rent paid. Next entry, that is purchased on 20th April. Purchased office furniture for rupees 11,200. Purchased office furniture for rupees 11,200 on 20th April. Here see, the two types of accounts involved are purchase account and cash account. Purchase account and cash account. Here in this transaction, we should not write purchase account. Why? Here they have mentioned what they have purchased. Here they have purchased the office furniture. So instead of writing purchase account, we need to write furniture account. Furniture account, it comes under real account category. The rule of real account is debit what comes in. Furniture, that comes in. So furniture account debtor to what goes out, that is cash account. Cash is going out of the business. Furniture is coming into the business and cash is going out of the business. Cash, it is comes under which category? It is an asset, so it comes under real account category. Rule is credit what goes out. We are paying the cash. Cash goes out for purchasing the office furniture. Purchased office furniture for rupees 11,200. See, in this transaction again, they have not mentioned whether they have purchased the office furniture for cash or credit. Here also we will assume purchasing the office furniture for credit. So the entry is April 20th. Furniture account debtor. Okay, we are not able to see. 1 minute. Here I will write down date, particulars, ledger folio, debit and credit. On April 20th, furniture account debtor to cash account. rupees 11,200. Being purchase of furniture on credit. Here we need to underline only particular column. Now next transaction, that is on 24th of April, cash withdrawn for household purpose. Cash withdrawn for household purpose, not for business purpose. They are mentioned here, cash withdrawn for household purpose means we have to write drawing account. Okay, so drawing account, it is a personal account. Means so here drawing account, it is debited. Why? Because it represents the withdrawal by the owner. For what? For not business purpose, for personal purpose. If it is personal purpose, then only we need to write the drawing account. Here he has withdrawn the amount for household purposes. So drawing account, it is a personal account. We need to debit. Means what is the rule of personal account? Debit the receiver. Means Suresh. We should not write Suresh's account. Here we need to write drawings account because cash withdrawn for personal purpose. So drawing account, debtor to which account we need to credit now? Cash account is credited because cash is going out of business. Cash account, it is an asset, it is a real account. Credit what goes out? Credit cash goes out. So the entry is on 24th of April. Drawings account, because here Suresh, he has withdrawn the amount for personal purpose. Drawing account debtor to cash account 5,000 rupees 5,000. Being cash withdrawn for personal purpose. Next one, that is the last transaction, that is on 30th of April. That is, see, interest received in cash rupees 1,200. Interest received in cash rupees 1,200. The two types of accounts involved here are, first one, that is interest received. Interest received, it falls under nominal account category. Okay, and second one, that is cash account. Cash account, it is a real account. So the rule of real account is debit what comes in. Debit what comes in means cash is coming into the business. So we need to debit the cash account. And interest received, it is a nominal account. The rule of nominal account is credit all incomes and gains. Means it represents income for the business. That is interest received. So on 30th April, cash account debtor to interest received account, that is rupees 1,200. Sorry. Now you are able to see, right? Okay. Now we will write the narration. Being interest received. Here we have finished our example, that is we have journalized the transactions based on golden rules of accounting. If you have any doubt, please leave a comment. Okay, thank you.